Hey everybody, what's up? Friday, right before a long holiday weekend here in the United States. Let's do an update. I want to talk about NAFTA, where a deadline now looms for some kind of a deal between the United States and Canada. The United States concluded a deal with Mexico earlier this week, and now the pressure is on to get one done with Canada. Now, I'm going to talk about what is the likely market reaction, and I'm going to talk about the fundamental reality based on MMT understanding. If no deal gets done, and right now the talks are being characterized as tense, and Trump has made some private comments, I guess, which have kind of poisoned the atmosphere. Gee, think about that. So I don't know. And markets are trading as if there is worry now about a deal getting done. For example, they're really starting to sell the Canadian dollar. You see some U.S. stocks like Ford getting hit. All right. So now let's talk about what the reaction is likely to be. If the deal falls apart, if there is no deal between the United States and Canada, you will see a zombie reaction selling the Canadian dollar. No question about it, and that has already begun. And it could maybe get very, very vicious, that sell-off. All right, probably the same thing for Ford, etc. Now let's back this out into the bigger macro fundamental reality of trade deals in particular. And the United States has been a beneficiary of these deals because it has been able to tap into cheap sources of supply, in other words, imports, and this applies to Canada, this applies to Mexico, this applies to China. The U.S. consumer, the U.S. economy has benefited from abundance, supply, goods coming in from abroad at a lower price level than what otherwise would have been the case in the United States. Now, this has resulted in strength in the dollar. Now, how is that so? Because when you keep inflation low, the purchasing power of your money is high. It is reflected in foreign exchange markets as a higher value of the exchange rate. What Trump is doing, and what the markets really do not understand right now, they're reacting on emotion, they're reacting on a belief system, is that somehow all of these things, the tariffs, the sanctions, the shutting off of supply, the raising of prices via the enactment of tariffs, etc., somehow that factors into a higher dollar, which is absolutely incorrect. Now, I equate this situation to, if you go back to when the Fed, during the financial crisis of 2007 to 2009, when the Fed first started to engage in quantitative easing. When the Fed first started to engage in quantitative easing, everybody went crazy. Everybody said that was going to be hyperinflation and the dollar was going to collapse and it's printing money. They're printing money. They print the money. They're printing money. They're printing money, right? Everybody said that. And not just these quacks like Rogers and Schiff and Faber, but some very, very well-known and high-level people on Wall Street. I mean, there was one example I remember very, very clearly. John Taylor, this guy John Taylor, ran the biggest foreign exchange hedge fund, FX Concepts. FX Concept managed something like 10 or 15 billion just in the foreign exchange markets. For a long time, they were known as the Tiffany of FX hedge funds. I remember seeing John Taylor on an interview, probably it was either on CNBC, of course, or Bloomberg, where he said, the dollar is finished. It is toast. And he bet his entire hedge fund on a demise of the dollar based on quantitative easing. Now, you have to understand, these guys really didn't understand what quantitative easing was all about. I mean, the Fed's purchases of assets was stripping the economy of higher yielding, or actually stripping the economy of income. I was the only one at the time who said this is deflationary. This is not inflationary at all. They are removing high quality, higher paying assets, replacing that with reserve balances that paid nothing. At the time, reserve interest on reserves was zero. Remember, 0% interest rates. So they're stripping out the treasuries and mortgage-backed securities that paid higher income to the economy, and they were replacing it with reserves that paid nothing. All these people thought it was money printing. I said it was money unprinting. You could go to my blog, Mike Norman Economics, and you could search. There's so many posts I put up about this, and I was right. I said it was going to cause the dollar to rally. I made a video in 2009 saying the dollar was going to go up. All these guys were selling. John Taylor's hedge fund had to shut down. This guy who had been in business probably for 25 years and ran the biggest foreign exchange hedge fund, who went on TV and said, the dollar's finished, it's over. He had to shut down. Now, in the early stages when the Fed did QE, they all sold the dollar. But the trade to do at the time was to buy it. Now, I equate what's happening right now with all the tariffs and sanctions and everything else to exactly the same scenario. You are having a herd reaction. The crowd is reacting on a belief system that somehow this benefits the dollar. Now, maybe in the long term it does, because maybe it does incentivize production in the United States. But right now, by the way, if you look, since the tariffs, since all this stuff has begun back in July, we have seen no increase in capacity utilization in the United States. So there is no indication that they're picking up the slack here for whatever supply or product we are now losing from overseas as a result of the tariffs. Which means only one thing, that prices are going to continue to go up. And again, this belief, it's very fascinating to me how I see the foreign exchange market reacting as if inflation in the United States is a positive for the dollar. Yet when they look at Turkey or they look at Argentina or they look at any other example of high inflation, they say the currency is toast. It's finished. So this double standard is a clear indication that they just have it wrong. This is another QE episode. This is a quantitative easing episode that we are seeing. Tariffs, impediments to trade, protectionism. While they may help the dollar in the long term as production shifts over here, we do not have, it's not that we don't have the capacity, but much of our capacity is outdated. Over the last, and I put a chart out, and if you want to get this chart, and if you're not a subscriber to MMT Trader or one of my other services, I will send you this chart that I sent out by email the other day. The amount of real investment in the U.S., fixed investment, over the past almost, I think it was like something like 50 years, has gone down. Where has that investment gone? It's gone overseas, all right? So a lot of our productive capacity is not up to speed with the rest of the world. So, you know, even though long term that might be a positive, it should, everything that Trump is doing should incentivize more capital investment here in the United States. It's just not ready to supplant what we are losing as a result of these measures. So I'm going on record again. I know there's a dollar rally going on today. By the way, with this dollar rally today, if you go back 1 month to the last unemployment report, the jobs report, last early August for the July report, the dollar index is still lower than what that report was on the day of that report. All right, folks, I'm going to say one more time. Today is the last day that you can sign up for MMT Trader or Zombie Trading. Zombie Trading, of course, is my short-term Forex signal service. We front run the zombies because we know how they're going to behave. We take their money and then we get out. Both of those things, this is the last day you could sign up at $145 a month. As of tomorrow, it goes up to $195 per month. The price increase does not affect current subscribers. If you were a former subscriber and you quit and you want to come back in, I have an amnesty going. I will let you back in at your old rate, but you have to email me at mnorman@pitbulleconomics.com. All right, so today's the last day. It goes up to 195. A lot of you have signed up recently. That's fantastic. I hope you're enjoying it. And that's it. Have a great Labor Day holiday weekend if you're going to take part in that. And I'll see everybody probably on Tuesday. Have a good one. Bye-bye.